2023, the new year, is going to be a take it back to where we once belonged, in the sense that we're going to see fundamentals become more important.
China was in a contraction cycle in 2022. 23 will be opposite from a economic driver perspective from China.
I personally believe that there will be a transition period in the first half of next year. We will face a huge challenge. I think it will gradually get better.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 5 a.m. in New York, 10 a.m. in London, and 6 p.m. in Hong Kong. Our top stories today. China reopens to the world. Beijing lifts the last of its tough COVID-0 restrictions, scrapping its quarantine requirement for inbound travelers. Markets give the Chinese move a thumbs up. Stocks and U.S. equity futures are higher around the globe. And the U.S. is still struggling with the aftermath of a deadly record-breaking winter storm. Thousands of travelers are stranded, and airlines say it may be days before flight schedules are back to normal. Welcome to Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Kriti Gupta in New York. Anna Edwards and Matt Miller are not here, although Matt Miller will be joining later this morning, Kriti, because of course it is a holiday week and the last trading week of 2022.
The last trading week of 2022, but that doesn't mean that there isn't actually any market action. A lot of people are expecting this week to be quiet, Kailey. It is anything but, especially with that China story that you just talked about. Take a look at the market read through here, because you are seeing it show up in the Asian session overnight. The MSCI Asia Pacific Index stronger by about 0.4%, but the real outperformer, surprise, surprise, is going to be China. As we talk about that reopening story, getting a little bit more wind. The idea here, those quarantine requirements for foreigners are now completely removed, or going to be at the start of January. CSI 300 up about 1.2%. Like I said, that's the real outperformer. And by the way, a lot of tech exposure in that index, something that has translated into some of the Korean benchmarks as well. You are looking at this in the commodity space as well. Copper, the real outperformer, up about 3.3%. Once again, really speaking about the exposure to the Asian property sector. And of course, in the currency space, the similar story. The Chinese yuan, the offshore Chinese yuan, I should specify, strengthening to about an exchange rate of 6.96 against the dollar. You can see a little bit weaker for the dollar by about 0.1%. But it also continues and ripple effects into the European session as well, because once again, green on the screen there. The Stocks Europe 100, 600, I will say, up again 0.4%, the same margin as the Asian index. So remember, low volume is still going to be a factor here, especially for that index, with the UK closed for the holiday today. Of course, in the French market, you do have the French index up about 0.9%. The DAX not far behind, up about 0.6%. But the euro dollar story is what's really catching my eye, Kailey. The idea that the dollar bear case, that weakening story, it does continue even in a light week like this. We are seeing the rate at 106.
All right, Kriti, well, let's take a check on where things stand in the U.S. Futures market with about 4.5 hours to go until the opening bell. No surprise, given the positive risk on sentiment in Asia, Europe, really the entire world. We are seeing futures moving higher to start this last trading week of the year. S&P 500 futures right now up about 0.7% to around 38.97. So we are sub 4,000. We are far below where Wall Street strategists thought we would be ending the year in 2022, something I'm sure we will be talking about all week. In the bond market, not a lot of movement because, as Kriti mentioned, volume and liquidity is quite low today given the holiday week. So we are unchanged on the 10-year yield. 3.74 is where we trade, coming off, of course, the biggest weekly rise in Treasury yields we have seen since early April. The dollar is weaker on the day. Kriti was talking about the strength we are seeing for other currencies in Asia and really elsewhere in the world. And then oil, part of the commodities read through to the China story. WTI crude up about 0.7%, trading just above $80 a barrel at the moment, Kriti.
At the core of it, though, continues to be that China story. The reopening story is gaining quite a bit of momentum. From January 8th, inbound travelers will no longer have to quarantine. They'll only be required to obtain negative COVID test results within 48 hours of their flight. That compares with the current requirement of about 8 days of isolation, 5 of them at a designated quarantine hotel. Joining us now to break down the developments, Bloomberg's Alan Wan in Shanghai. Alan, tell us a little bit more about China's plans to reopen its borders in the world. What has been the reaction?
Well, the reaction of markets has been very swift and positive. But first, like you said, I just want to reiterate some of the key policy points. From January 8th, China's going to end this quarantine for foreign arrivals, but still they're going to, it's a policy that, that's hurt the economy and kept China isolated from the rest of the world. I mean, that said, folks are still going, who are arriving in China are still going to have to produce 48-hour test results, PCR test results. But that said, that's really nothing compared to what we have right now, right? Which is about 5 days of hotel quarantine and 3 days at home. And I myself, I've done 2 long stints of quarantine, one for 14 days and one for 10 days, and I tell you, they're pretty brutal. And going back to the market reaction, we're seeing the travel, tourism, and luxury stocks soaring today, especially in countries that rely on Chinese tourism. Countries like Japan, South Korea, Thailand, and the Philippines. You're seeing shares of companies like South Korea's Lot Tour and Japan Airport Terminal surging more than 3% today. And in Hong Kong, you're seeing online searches for flights between Hong Kong and mainland China on some of these websites such as Ctrip and Trip.com, surging 6-fold from last night compared to where they were just last week.
Okay, so let's talk about those case numbers as well, what they're looking like right now, and frankly, what the government is doing to try to deal with the surge. How equipped is China with the releasing of all restrictions?
Yeah, I mean, just going back to the numbers. Well, we've been getting about 3,000 to 4,000 daily, which sort of flies in the face of everything we've seen on the ground and what even the provinces have been reporting. The fact is that these numbers have been pretty unreliable, and today the National Health Commission, the last couple of days, the National Health Commission said that it's going to stop reporting daily case numbers, and the CDC is going to report it only on a monthly basis. What we do know is that about 18% of China's population, roughly about 250 million people, already have COVID. We know that based on the minutes of a meeting that took place by the China's National Health Commission. So that's what we know so far. And of course, some of the provinces have been reporting larger numbers too. We got Zhejiang province, which is next to Shanghai, said that they've had about 1 million cases and expect another 1 million more before it peaks. In terms of what the government is doing about it, well, right now it's downgrading it's downgraded its management of COVID from the highest level to the second highest, but it also pledged to increase supply of ICU beds, more life-saving equipment such as ventilators, and also to retrofit these quarantine facilities into hospitals that can handle COVID patients.
Certainly something we're going to keep an eye on. It's going to be fascinating to see how China deals with essentially something the United States had to deal with 2 years ago. Bloomberg's Lemand, thank you as always for breaking it down, joining us from Shanghai. Joining us now from London, Eddie Vanderwall, Bloomberg Markets Live, Deputy Managing Editor. Talk a little bit about what the Chinese reopening could mean for markets and commodities in particular. Eddie, you are starting to see this show up in copper, in oil, in gold, even in palm oil. Walk us through what you're watching when it comes to the commodity space.
Yeah, absolutely, Kriti. Always the China reopening story, any China story is felt acutely in commodities. And yes, I think we are going to see things like copper in particular, seeing a lot of upside here. But as you point out, the US went through this, Europe went through this, and we have seen that reopenings are messy, right? Reopenings, you see these surges in cases and so on. And I think that's what we're going to see. We're going to see rallies, and then we're going to see retrenchment as the China story develops on a day-by-day basis. Of course, now we're not getting the accurate numbers of cases out of China anymore, and I think that's going to play into the uncertainty. But I think for the moment, this is a very positive story for commodities, and it is certainly something that will make traders a little bit more bullish as we go into the beginning of next year.
Well, of course, something factoring into the commodity markets here in the U.S., especially natural gas and even oil to some extent, given the refinery implications, Eddie, is the weather here and the cold front surge winter storm we have seen over the last several days. While natural gas futures are higher here in the States, though, in Europe, set for further losses. Walk us through what's going on your side of the Atlantic.
Right, exactly, Kailey. I think what we've seen is that there's been a real competition in the global market for natural gas, right? Europe has been buying up a lot of gas that would have gone to the US otherwise, and even taking exports from the US because, they're not getting Russian supplies. Now, the weather is much milder in Europe, but now we're getting that extreme cold front in the US. And I think that's going to define where energy prices are going to go over the next few weeks. I do think that we're seeing a narrowing of the spread between Europe and the US, simply because the picture is looking so much more rosy in Europe at the moment. But there's a lot of upside to be had in natural gas prices in the US if this cold spell continues.
All right, Eddie Vanderwalt of Bloomberg Markets Live, thank you so much. And Creedy, while we're talking about the weather, I'm really glad I drove home from Virginia yesterday, because if I was flying, I probably wouldn't be here anchoring the show with you this morning.
Yeah, there were some pretty scary stories of stranded travelers across the country that, of course, was only exacerbated by some of the pain you saw in Southwest. Much of the rest of the United States being hit by ferocious winter conditions as well. Southwest Airlines expecting the travel chaos caused by the weather to continue for at least another few days. Get this, Kailey, it canceled almost 3,000 flights on Monday and had hundreds of others run late. Bloomberg's Ed Ludlow joins us now to break it all down. Ed, I bet you were glad you weren't on a plane yesterday.
Yeah, I mean, the picture from Southwest is difficult, but it's actually kind of unique to them among other U.S. airlines. Shares down now by about 3% in early pre-market trading. The 3,000 flights cancelled is 67% of their schedule Monday. You compare that, for example, with a Delta. Delta had significantly fewer cancellations. And Southwest, part of the frustration is they were fully staffed over the holiday period. But unlike some of their peers, they don't operate hub systems, right? Southwest is all about point-to-point travel. The company issuing a statement saying that 23 out of the 25 airports they serve experience disruption. As you said, the company's chief executive told the Wall Street Journal on Monday night, Bob Jordan, that disruption will continue into Tuesday and beyond. It's also caught the attention of federal agencies. The U.S. Department of Transportation issued a statement on Twitter saying that it's concerned by Southwest's unacceptable rate of cancellations and delays, and they will be looking into that further. Because, as I say, you compare the cancellation level for Southwest with a peer like Delta, and they've actually significantly reduced their schedule compared to some of those other airlines. The weather, of course, a very serious story. In Western New York State alone, 28 deaths now attributed directly to the storm. So very difficult among the holiday season, but the market clearly paying attention to this story.
Yeah, President Biden has declared a state of emergency here in New York. Bloomberg's Ed Ludlow, thank you so much. And of course, all of us wish any of you who might need to travel today good luck, and make sure you're staying warm out there. Now, Ed was mentioning the negative effect we're seeing for Southwest in pre-market trading. That stock down more than 3% before the bell, but there are a lot of gainers out there to consider today as well. Of course, feeding on from the China story we were just discussing with Alan and Creedy running us through what happened in the Asian markets as a result of that next reopening measure. You're seeing follow through for some of those Chinese stocks listed here in the U.S. The ADRs of Alibaba, Bilibili, JD.com, all higher in the ballpark of 2.5 to even 3.2% in the case of Bilibili. And also, Creedy mentioned what we are seeing in metals and commodities that filter through on the idea that more demand will be coming out of China. With copper prices higher today, that is translating into related stocks, materials, mining companies like Freeport-McMoRan, which is up about 2.4% before the bell. One stock that is lower, though, in pre-market trading and has been lower for 6 days in a row, potentially set for a 7th day of losses, extending the longest losing streak since 2020, is Tesla. The stock is down another 1% before the bell. It has had an incredibly rough go of it over the last several months. Creedy, this was a stock that was worth more than $1 trillion at the beginning of the year. It is now worth less than $400 billion. Absolute wipeout in 2022.
It's fascinating to see how much of that story is really Tesla fundamentals as opposed to the personal Elon Musk wealth story, and of course the Twitter acquisition as well. And by the way, the repercussions it has for the broader market. We're going to check in with Ryan Lemand, the CEO of Neovision Wealth Management, to really talk about what the future of the equity market looks like in 2023, not just for Tesla, but some of the other heavyweights as well. Stay tuned for that interview. And of course, on the crypto space, Aaron Kaplan joins us, founder and co-CEO of Prometheum. Stick with us. 2 great interviews ahead. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Creedy Gupta with Kailey Leinz in New York. Anna Edwards is off. Matt Miller joining Kailey next hour on Surveillance. Stay tuned for that duo. 2022 has, of course, been defined by lightning-fast inflation, Russia's invasion, recession anxiety, and more. Bloomberg Quick Take Scarlett Fu relives the biggest Bloomberg headlines from the last 12 months. Take a listen.
So 2022 was quite the year. Here's Bloomberg's 2-minute roundup. In January, the Federal Reserve laid the groundwork to raise rates to tackle the fastest inflation in a generation. Adding to global inflationary pressures, Russia's invasion of Ukraine. The attack began in late February and dominated headlines, from the destruction on the ground to U.S. sanctions on Russian banks and oligarchs. By March, attention zeroed in on the specific threats that Russia posed, restricting the flow of natural gas to Europe and attacks near a nuclear power plant in Ukraine. Corporate drama started to pick up in April when Elon Musk made a $43 billion offer to take Twitter private, while Netflix reported a loss in subscribers and changed its strategy to embrace advertising. The theme in May, market mayhem, as the Fed boosted the size of its rate hike to 0.5 percentage point, sending U.S. stocks to 13-month lows, while a single trader at Citigroup made a mistake that sparked a flash crash in European stocks. Recession fears took root in June. Half the headlines of Bloomberg's 10 most read stories that month featured the R word. Another R word, Roe, after the Supreme Court overturned Roe v. Wade. Geopolitics were the big stories over the summer. The killing of former Japanese Prime Minister Shinzo Abe, and Nancy Pelosi defying China when she visited Taiwan. The UK lost its longest-serving monarch in September. 2 weeks later, the new Prime Minister unveiled unfunded tax cuts that caused the pound to crash. In October, Credit Suisse became a meme stock, setting new lows as some retail investors bet the bank would go bust, while Xi Jinping consolidated his power, adding more loyalists to China's leadership. Crypto winter arrived in November when FTX collapsed, destabilizing the industry. And by December, bankers were tallying up the costs from slumping markets, sparked by the Fed's rate hike campaign. Their wallets will take a hit as Wall Street firms prepare to slash year-end bonuses.
Creedy, so much that we've had to go through this year. It is absolutely crazy how much has come to hit the market, take it by surprise. I was just taking a look at last December 2021, what strategists were forecasting for year-end 2022. The average target for the S&P 500 was 4950. We are more than 1,000 points rather below that today on the last trading week of the year. But of course, there's been so much that there's no way strategists could have anticipated coming, like the war in Ukraine and also a Federal Reserve that hiked more than 400 basis points in a 9-month period.
Not to mention all the geopolitical uncertainty that we've seen. Remember, this was the year, as Scarlett did point out, of several resignations out of the UK. You, of course, had Mario Draghi resigning out of Italy as well, and just the politics, the geopolitics that seems to worsen and worsen over in Europe and around the world, I would argue. Had some major elections over in Brazil as well as, of course, in the Middle East. I would even say, you were bringing up the market hit. Let's talk about the recession calls as well. Everyone's expecting the fourth quarter to be the big recession in Europe and the U.S. It's kind of crazy to see that we haven't actually seen that hit yet.
Yeah, that's definitely going to be a story we're watching primarily in the first half of 2023, but consensus seems to be building around a good first half or a bad first half and then a better second half. We'll see if that actually comes to fruition. And of course, for a look at some of the other big stories from the year, from the war in Ukraine to the crypto implosion, check out NI Big Take on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Preeti Gupta in New York. And now keeping you up to date with news from around the world, let's get the first word. In South Korea, the military says it sent drones across the border into North Korea for the first time. It's an unprecedented move that follows North Korea's decision to send 5 unmanned aerial vehicles into South Korean airspace. North Korea's leader Kim Jong-un just opened a major political meeting to set security, economic, and political policy. In Ukraine, the foreign minister is calling for a peace summit at the United Nations within 2 months. But Dmytro Kuleba tells the Associated Press that he does not expect Russia to take part. Kuleba says Moscow must face a war crimes tribunal before Ukraine engages in direct talks. A UN spokesperson says that Secretary General Antonio Guterres can mediate, but only if all parties want him to. Peloton has begun selling refurbished bikes at discounts up to $500 below new model prices. The bikes will cost anywhere from about $1,100 to $2,000. Last month, Peloton disappointed investors with a lower than expected holiday forecast. And in Western New York, at least 28 people are dead in one of the worst weather disasters ever to hit the region. More than 4 feet of snow fell on the city of Buffalo. Cars were buried in snowdrifts, and emergency crews could not respond in time to medical crises. President Biden has offered federal assistance. So, Creedy, of course, an immense human toll when we think about the winter weather that hit the U.S. really all across the country over the last week. But there also are real business, economic, market implications of weather events like this, considering in Texas, for example, where there also was a deep freeze, you have a significant amount of refining capacity still offline.
Refining capacity, let's not also forget about the electricity grid. Remember, the southern states operate in a different kind of electricity grid and different kind of weather aversion system than the north does. Of course, they are far less prepared for this kind of winter weather. And we also thought about the chaos that the airlines are dealing with. Ed Ludlow of Bloomberg Technology walked us through some of the implications. Kailey, we always talk about Christmas chaos and Thanksgiving chaos, but this is taking it to another level.
Yeah, if you're still trying to get home from holiday travel, may the force be with you, because we know a lot of delays could still linger for days to come. But coming up, we're going to zero in our focus back on the markets. Ryan Lemand, Neovision Wealth Management CEO, will be joining us with his outlook for 2023 as we have just a few trading days to go this year. This is Bloomberg. This is Bloomberg Surveillance Early Edition. Here's what you need to know. China reopens to the world. Beijing lifts the last of tough COVID-0 restrictions, scrapping its quarantine requirement for inbound travelers. Markets give the Chinese move a thumbs up. Stock and U.S. equity futures are higher around the globe. And the U.S. is still struggling with the aftermath of a deadly record-breaking winter storm. Thousands of travelers are stranded, and airlines say it may be days before flight schedules are back to normal. I'm Kailey Leinz with Creedy Gupta in New York. Anna Edwards is off this week, and Matt Miller will be joining me on surveillance in the next hour. And Creedy, we're going to be running through the market action this morning, which by and large is positive. Those moves from China, the easing of inbound traveler restrictions, really lifting risk sentiment that started in Asia, but that is filtering through to other parts of the world, including right here in the U.S. S&P 500 futures right now up about 0.75%, trading at just shy of 3,900. In the bond market, we go nowhere. Remember, the UK is closed. Volume, liquidity, much lower today, 3.74%, where we trade on the 10-year. It is a weaker dollar story compared with Asian currencies and really most in the G10 space. But the filter through from China is showing up in the commodity complex. Copper futures here in the U.S. up about 3.3%. The idea there being there's going to be more demand coming from the world's second largest economy. As for some stocks to watch in pre-market trading this morning, we were mentioning the winter weather, the disruptions it has created in the airline industry, but it is especially for one name. Southwest yesterday had 80% of its flights disrupted on Monday, 3,000 of them canceled, and they say that the disruptions could last for several more days. So that stock is down about 3.5% as this airline really is affected more than others. They were responsible for 3/4 of yesterday's cancellations. The Department of Transportation talking about how they are concerned about what they call an unacceptable rate of cancellations and delays. But other airline players are doing a bit better, even as they too grapple with the aftermath of the storm. Delta Airlines actually up 1% before the bell, and you have United and American each up around 0.5 to 0.7% in pre-market trading too, Creedy.
Well, that sentiment you were talking about in the U.S. Benchmarks, well, it's actually something that's carrying over to the European session, or has been in the European session as well, really coming from that Asia story, Kailey, that you were talking about. The Stocks Europe 600 up about 0.5%. But I would say the real outperformance here, it's in the French stocks, the French benchmark, where you see up about 1% on the day. But the DAX, the German DAX, not far behind, up about 0.7%. But to me, I still think the most interesting story is the currency market, where you start to see essentially the bear case for the greenback actually expand a little bit. Things are getting a little bit better, even marginally better over in Europe, and that is creating a little bit more optimism when it comes to things like euro dollars, 106 on that currency pair, Kailey.
All right, you can always trust Creedy Gupta to be excited about what's happening in foreign exchange. Let's go beyond just FX, though, to the wider markets. Joining us now to discuss is Ryan Lemand. He is Neovision Wealth Management CEO. Ryan, thank you so much for being with us. Just a few minutes ago, Creedy and I were talking about how far below expectations 2022 actually looks like it's going to turn out. It was a far worse year for equity markets here in the U.S. and around the world than initially anticipated. How much worse do things have to get before they get better, in your view?
Hi, Kailey. Thanks for having me. So again, I look back to January 2022. Things looked positive. We looked all enthusiastic, and no one expected what was about to happen in 2022, especially coming out of COVID. So the world reserves surprises sometimes. Fundamentally speaking, we do expect 2023 to be, worse than 2022 on three grounds: geopolitical, financial, and macroeconomic. Geopolitical, you mentioned it, Taiwan, North Korea, there's Iran as well, China, US. Financial, compressed earnings. We should see more and more compressed earnings into 2023. That's on the financial front. On macroeconomic, inflation fights usually weaken the economy and slow it down. So we should see a macroeconomic slowdown, particularly in the US.
Okay.
Go ahead, Kailey.
Well, I was just going to say, if that's the case, in that kind of not so great environment where what you're describing, Ryan, where do you want to hide? Is there any pockets of fair value where you think it is safe to be?
Absolutely. Now, the good thing is that it's not the end of the world. It's something we as professional portfolio managers know how to deal with, and we know how to navigate. First of all, cash is king. The cost of capital is back. Time value of money is back. We can have a 12-month deposit at 5% today. This is our baseline revenue. And then we can add to it emerging markets. Emerging markets are back. China should be back. There are multiple emerging markets that are coming back. The Gulf Cooperation countries, which are oil exporting back to the dollar, are quite a positive story. There's private equity. And you have commodities. Commodities will be back as well on the back of China. There are the precious metals as well, gold. So we are quite positive in gold on the back of central bank buying recently.
Well, Ryan, when we talk about the equity market specifically, it almost feels like 2022 was one where the equity market took the cue of the bond market or of the commodity market. In other words, if oil went higher, stocks went lower. If the yields went higher, stocks went lower. Do you see the equity market again taking those same cues in 2023, or will there be a different leader?
Well, I think the leader into 2023 will be driven by earnings, by company earnings and macroeconomic numbers. I think 2023 will be different than 2022 in that respect. That economic slowdown, and we should see some slowing economic numbers, higher unemployment, etc., and lower earnings will be the drivers. 2022 was quite particular and very hard correlation between the bond market or fixed income in general and equities. Even the 20-year treasury has completely underperformed stocks, which is quite unique, and I think it's the first time in history this happens.
Well, it's interesting that you talk a little bit about the emerging market complex as well, because I wonder how much of the equity strength that is perhaps expected in 2023 relative to 2022 is really just a function of fund flows. The idea here that nothing is or will be weathering this recession as well as American assets, and therefore that there is no alternative idea kind of comes back into the forefront. How much of it is going to be a function of fund flow?
Well, fund flow will always remain here. Let's not forget that almost 40% of the US market cap is composed of retail investors. This has reached a peak during COVID when you had lots of retail traders. This will continue to flow. There's the FOMO as well, fear of missing out, that will continue. And this is what's actually supporting the S&P 500 today. That's why the S&P 500 is not at 3,500. However, as economic numbers are lower, as earnings are lower, we suspect flows will go elsewhere. Today, there is an alternative. You can get a 12-month deposit for 5%.
Well, if we could zero in particular within emerging markets as well to China specifically, which now has basically undone the last remaining COVID zero measure with releasing the quarantine requirement for inbound travelers. Massive reopening of a massive economy, the second largest economy in the world, Ryan. How are you factoring that into your thesis for next year?
That's part of our emerging market portfolio, stock picking, choosing stocks. However, this doesn't come without any risks, because let's not forget that COVID now is hitting China quite hard. We have millions and millions of infections each day. We will see that as well, and this will impact the economy. However, we do see it as a positive net-net because then China will move away from COVID just like the rest of the world, and this is a positive story. And that's why we started buying into Chinese stocks as soon as China started giving hints about reopening, and this is happening. Another winner are commodities. So commodities are correlated with Chinese reopening, and that's why we see a positive story in commodities as well. Commodities got completely hammered over the past year, and now is the comeback.
Ryan, it sounds like you're saying that this Chinese reopening is, at the end of the day, inflationary. Is there a case to be made that it's disinflationary?
I don't think so. It is inflationary for the rest of the world. The US will also suffer from that, some imported inflation. The House passed the $1.65 trillion package a few days ago. This is also inflationary. We do not think that the inflation story is over yet. Traditionally, macroeconomically speaking, high single-digit inflation rarely comes in one wave. There is always a second wave once wages start catching up with inflation. So the inflation story is not yet over, we're afraid.
All right, Ryan Lemand, Neovision Wealth Management CEO, inflation, the defining story for 2022. Likely will still be one of the primary stories of 2023. Thank you so much. And coming up, we'll continue our discussion on the year ahead, but frankly, what it's going to bring for crypto after a year which absolutely shook the industry to its core. We'll be joined by Aaron Kaplan, founder and co-CEO of Prometheum. This is Bloomberg. This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Peterson Institute President Adam Posen. That's at 12 p.m. in New York, 5 p.m. in London. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Kriti Gupta in New York. Anna Edwards and Matt Miller are off the program today, though Matt will be joining me in about 20 minutes or so on Surveillance. And of course, Matt also joins me every week on Bloomberg Crypto, where we have had an incredible year of breaking down the challenges facing this industry. 2022 proved a challenging year, to say the least, for crypto assets, dragged down by the implosion of first the Terra stablecoin and then the collapse of FTX. So the question is, will next year see a recovery or further fallout? Joining us now is Aaron Kaplan, founder and co-CEO of Prometheum. He is with us from Los Angeles in the very, very early morning there. So Aaron, we sincerely appreciate your time. It is probably an understatement to say that crypto has been shaken to its very core this year. Do you anticipate that 2023 is going to bring more pain, or what will it take to actually bring some stabilization and recovery to the industry?
It's really been a rough couple of quarters for crypto, with first Luna Terra, then Three Arrows, then FTX, and a bunch of others really all going belly up. And I think the net effect in the long term will be positive. While there's really been issues with intermediaries, meaning financial service providers in the space, that is not where the true innovation's occurring. And like with the dot-com bubble, we really experienced a period of overexuberance and FOMO, and really an incredible amount of capital flowed into the space. And when that cycle ended, many of the companies that were either overextended or shouldn't have received funding in the first place basically were washed out and failed. But the companies that survived the dot-com crash, they had good businesses with innovative technologies, and they were able to thrive in a difficult economic environment and become the internet giants of the Web 2.0 era.
Well, Aaron, before all of these dramatic events happened, when we first, for example, started the Bloomberg Crypto Show in March of last year, so much of the conversation we were having was about institutional adoption, how that was going to be a legitimizing force, a stabilizing force in crypto. And I know at Prometheum, what you are seeking to do is bridge between traditional markets and digital markets. I'm just wondering if that bridge has now, or if that gap between the two has further widened as a result of all of these episodes, if that institutional adoption is actually going to start turning the other way.
So I think that we at Prometheum, who treat digital assets as securities and operate through our subsidiary Prometheum ATS under the securities laws, basically allow for the investor confidence, these investor protections, the proper segregation and custody of digital assets under the federal securities laws, which we believe is the proper way forward. And really actually sort of the events of the recent weeks and months have really been a catalyst for that sort of happening, because previously people were arguing that regulation killed innovation, but now what major trading firms, liquidity providers are looking for is a regulated route to be able to properly trade digital assets, and that's what we're able to provide. So while the events have been difficult recently for the industry, I think they present a great opportunity for us, as we really are the best route for compliant trading of digital assets through our subsidiary Prometheum ATS.
So where does that leave then the efforts of the Federal Reserve or the ECB or the PBOC, for example, when they introduce things like the digital euro, the digital yuan? I believe the digital euro about to make its debut in 2023 as well. What is your take on the acceptance of a product like that?
So we basically treat digital assets on the security side. The digital yuan, the digital euro, the digital yen are more on the cash or the stablecoin side and deal with more banking. We deal with more of the securities and financial services side. So it doesn't really have a dominant impact on us beyond the fact that it shows that the industry is maturing and that the innovations attendant to Web3 are becoming more ubiquitous.
Well, speaking of the industry maturing, then I wonder to what extent it's can actually fix its credibility problem going into 2023. What does it need to do to start seeing funds come back in?
I think what for a long time, the industry was arguing that regulation would kill innovation and that there needed to be new regulations or legislation in order to regulate the industry. But I think that going forward, what we're going to see, and particularly as a result of the FTX Alameda sort of debacle, is the swift application of the federal securities laws, which will provide a proper framework for the issuance, trading, clearance, settlement, and custody of crypto, ensure investors are protected, ensure that there are fair and orderly markets, and also ensure that customers' assets are properly custodied, segregated, and secured, which I think is really needed in order to return investor confidence and to really lead to that next wave of institutional adoption.
And what does that then mean for a company like Binance, for example? How does Binance really kind of secure its reputation moving forward? What do you think?
I think that's very difficult in certain fronts. Some would argue that they don't even know where Binance is located. And the recent events surrounding Binance, whether it's with the audit or the movement of certain large chunks of Bitcoin, have raised certain red flags. And the previous events attended to FTX, where those who didn't move to self-custody their digital assets quite quickly were really left being stuck and holding the bag and arguably wiped out, sort of has led to a potential contagion effect where customers and users of Binance are now potentially concerned about that and moving to self-custody much quicker now because they don't want to be the last one left and the last one who's wiped out. So I think that there's potential headwinds that Binance is facing, but Binance is also a very large and established player in the space. And as long as they were not following the sort of the worst practices established by FTX, they arguably will be able to potentially weather any storm. I think the bigger issue is on the regulatory side, as they could potentially face major headwinds there and major attacks on multiple fronts from different regulators around the world.
Right, and of course, those are details that we are still waiting to get the full story on when it comes to simply the lawsuit and the story of events. Aaron Kaplan, Prometheum, thank you as always for joining us and for your insight on crypto in the year ahead. Of course, our weekly show that Kailey mentioned at the top of the segment, Bloomberg Crypto, is taking a break this week, but it will resume in the new year on Tuesday, January 3rd. Be sure to tune in at 1 p.m. New York time. Kailey and Matt are going to take you through all the major themes of 2023, or at least the look ahead as of January. Stick with us. More ahead. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York. Kailey Leinz on her way to join Matt Miller for Surveillance in the next hour. Be sure to tune into that show. Turning in now to some of the best of Bloomberg this year. Laureen Powell-Jobs discussed her unique brand of philanthropy on the David Rubenstein Show peer-to-peer conversations. She sat down with Rubenstein in November in Washington.
There are a lot of ways to measure success in philanthropy. I actually disagree with you. There are plenty of metrics. It depends on what the goal is. So, for example, if you have an education organization, you can measure student learning, you can measure student serves, you can see if there's economic and social mobility over the course of a decade. So there are a lot of quantifiable measurements, and we look at all of them. There's a lot of data to collect. There's also qualitative data where we can and do talk to people directly, and we are in communities and we ask people about how they're feeling about their lives and their opportunities and the possibilities. And so we collect both qualitative and quantitative metrics.
So you collect this data. Do you ever say, well, it's not really working and we should try something else, or do you typically continue to support the projects you initially start with?
Well, it's a good question. Sometimes the arc of change happens slower than one would like, and so there are indicators that could be positive indicators that don't quite reach the goal, and so we sometimes double down and sometimes we stick with it, and other times we often make exit grants, and in the same way, you exit investments, we exit investments and grants.
So when you're a well-known philanthropist, as you are, how do you avoid having people come up to you at every cocktail party or every event and say, I have a great idea for you, and you must have a process for filtering these things, but how do you avoid all that?
I don't avoid, well, I avoid it by not going out to cocktail parties, but otherwise, I don't avoid it because I know great ideas come from everywhere, and I read all my own email, even though there can be several hundred a day, and I'm always sending ideas on to different team members or responding. We say no an awful lot, but every now and then we find someone who's doing something remarkable, and I never want to correct for that. I will happily go through hours and hours of people pitching me on ideas for that one gem.
So you were close to President Obama. I think you knew him reasonably well. Suppose President Obama had said, or President Biden said, I'd like to appoint you to a senior cabinet position, come in the government, or somebody said to you, you should run for governor or senator. Any interest in doing anything like that in the government? I
do live a life of service now, and I feel like I am getting good at it, better and better each day, learning a ton. I love what I do. To stop doing what I'm doing for a different realm of service would require a great deal of deliberation. It's not my intention, but I would not necessarily shy away from another opportunity if I thought this was the highest and best use of my time. I think what I'm doing right now is the highest and best use of my time, and it took me a while to get here, so I'm very happily doing it.
Laureen Powell-Jobs on the David Rubenstein Show, peer-to-peer conversations. Folks, let's just get a check on these markets because we are seeing green on the screen. Is this the beginning of the Santa rally that we have been waiting for really in the last couple of weeks? The idea that the last 5 trading day are going to see some green on the screen, like I said. But remember, it's coming on low volume. Futures are higher by about 0.7%. I think the currency story is the most interesting one. You're looking at euro dollar at 106. That is going to be significant. You are also looking at a 10-year yield. It's not really going anywhere. The dollar a little bit weaker on the day. Euro stocks up 0.5%. Brent crude, of course, trading with an 84 handle. Stick with us. More surveillance ahead with Matt and Kailey. This is Bloomberg.